Hello, hello, hello. Mic test, mic test, mic test. Hello, hello, hello. Mic test. So, hello guys, and welcome to our 124th edition of the Trading of Opportunities webinar. This is Nirav, and before we proceed with the actual webinar, let me just quickly check if our stream is live on LinkedIn as well alongside YouTube. Last time we had some technical issue on LinkedIn. And let's see. Well, this event will start soon. Wait for the host. What's going on here? The hell, man? It's still not working. Looks like we have again got technical issue there. But anyways, in that case, I'll have to check with their tech support staff, etc., etc. So hello guys, and welcome to our 124th edition of the Trading Opportunities webinar. And my name is Nirav, as you guys already know. First of all, we'll go with a quick introduction before we proceed with the contents of the webinar. So if you are not aware, we have been doing these webinars weekly. Every Friday, we conduct one of these webinars, and the timing is always the same: 2 p.m. GMT and 7:30 p.m. IST. Right. So if you are in any other time zone, just convert it accordingly using any of the values here. Next thing, more importantly, in the last 123 webinars which we have conducted so far, you can, by the way, see all of them by heading to 50 Eyes Market Analysis YouTube channel and checking the live section at the in the channel. We have so far connected all these webinars and captured a total of 308 trades, including some trades which were discussed in the last webinar as well. Right. And with all that being said, let me give you a quick rundown of the other important things which we covered during this webinar. As you can see on the top, we do have a book available on Amazon's Kindle electronic reading platform. You can check it yourselves. It is for intermediate to advanced traders. Think with the markets. A special course for those of you not aware of what Elliott Wave is can be checked out here by going to Elliott Wave video course. And those interested in just checking the introduction so as to be able enough to get through these webinars instead of what do you call going through the whole thing, a free course is also available. I will provide the link for that. It will be scrolling in the bottom of the webinar as well as available in the description of the YouTube video. Right. And most importantly, here is the track record of all the webinars which have been conducted over the years. As you can see, since 2016, we have had a exceptionally high accuracy of 84.84, 88, etc., etc. Basically, 80% plus for 6 consecutive years. After which we started doing the weekly webinar series, which has been there since 2022. And so far, as I mentioned, we have captured 308 trades in the same. Lastly, and with that, our announcement part will be over. We will be conducting a new batch for those interested in learning the advanced concepts on Elliott waves. It will be starting off in July last week. So those of you who are interested in learning more of the application of Elliott waves in live markets can contact me via this training program LT batch. And keep in mind the requirement is that you must have gone through the complete video course, which is available via here Elliott Wave course on my website. Right. That was about it for our discussions, and let's now begin with the introduction of how we'll conclude start and then conclude with this webinar. We'll start every discussion by checking what we said in the last webinar, and then we will check the actual chart and see what's going on right now. We have the charts of euro, crude, gold, followed by SPX Nifty and BTC in the end, which we'll discuss. I'll check audio before I begin with the actual discussion, and if you guys are live with me in the chat, do let us know. Looks to be working fine at my end. Tell us about gold. What is happening? Shahid is saying, Rockford, good job. Okay. Anyways, let me check the comments after we have gone to the discussions. So let me start off here. First chart on screen, we have the recording from last webinar conducted on, as you can see, 7 days ago, 12th of July 2024. And this is the chart of euro which we are seeing on the screen. And what we have over here is basically we discussed a long setup. The idea was that above 1.09164 we will be looking for long plays, and this was the main count which we had discussed at that point in time. There were some other variations, but all of them seem to point that some upside is expected, and this was discussed same time because we conduct all the webinars at the same time. So now let's quickly check the actual chart of euro. So here is that same trend line, and what do you call we have seen the market go above the 1.0901 trigger level. However, at the same time, this market has 1 second. Yes, yeah. At the same time, this market has not given us anything substantial. I am currently holding along here, but I'm not very bullish in this market given the fact that we have one counter view here as well. Let me show you that. So there are two basic views. The one which we discussed in the last webinar is this, suggesting bullish movement, basis on which we were thinking of taking long trades above 1.091 or whatever the level was. And the second view is, let me represent it with the another color. So in the second view, the correction is still continuing within this box range. And within this correction, we can see one more leg down before the next leg starts to the upside. Now, there is quite clearly visible that both of these are completely counter views. One is pointing to the upward direction, one is pointing first to the downward direction, and the likely possibility of them happening is that we don't have any clarity on which one is going to take place first. Let me see if I can change this color for here. Yeah, so long story short is one is pointing up, one is pointing down. I may or may not hold this position overnight, but it's not very big. But overall, it's a wait and watch market on euro. The clear long setup, actually, I shouldn't say clear, it can still go down even if we see a cross above the 1.09845 mark. So, no clarity. Anytime I'll take longs, it will be smaller position, and I'll probably look for short term longs like scalp longs rather than taking position longs. And as far as shorts are considered, shorts can become clear below 1.06770 mark. So it's a wait and watch market. No clarity on the long side and some clarity on the short side. As I just mentioned, let me just check out the levels and mark them here. This level for shorts, and as I said, longs do not have any clarity, so we'll look for scalps and what do you call smaller position sizes. Right, let me just check the comments real quick. I haven't checked anything. Tell us about gold. What is happening? Hi, Shahid. About saying hi and hello. We will obviously go to gold after we discuss the charts of crude. Hello, Rockford, our member as well as regular viewer here. Hello, Aditya. Please do analysis on ITC Indian stock, Rohit. So while I am tracking ITC and I do remember it has taken out a big important level to the upside, I just do not take any stocks at all. We don't take any request as such so far. If we get more participants, perhaps more what do you call requests per se, then we might consider it. But for now, I will not be considering it. Right. So that was about it for our discussion or quick discussion on euro. Nothing specific or tradable action. Wait and watch. Let's now head over to our next chart of crude oil CL. And here is the recording from our last webinar. Let's see what we were discussing about crude oil. Let's say somewhere here. So crude oil, we had a view in the last webinar that we will look for long trades above 83.90 mark, this marked line, almost 84. And the idea was that this market has taken out an important resistance trend line, and then this was the support. We will check that on the real chart real soon. So basically, we were looking for either straight of longs above 84 or more of the correction and then longs. That was the view. You can check the whole analysis. It starts around 12ish something and goes to 17. But without wasting time, here is the actual chart of CL. Now, as you guys recall from what we just saw in the last webinar recording, the long trade setup never got triggered. This was the high which we wanted to see taken out. The market never even went there to touch it. So the second setup, which was the market will continue with the correction to the downside and then go up, seems to be playing in this counter. And let's see what this is suggesting trade wise or count wise first, and then possible trade wise. So count wise, it looks from that this point of reference, we have the wave one and then a corrective wave two, which looks like a possible zigzag is in play, and the trend line is also holding a channel here. So worst case scenario would be that this market goes, takes out this low, and completes an corrective ABC structure. So that will mean the market will possibly go lower than 80.26, right? And then possibly go to the upside. That's the first take. Second take is that possibly this market has already completed the B here and C here and then can take off straight off, right? Both cases, we do not need to do anything. We already have alerts placed around the levels of 83.60, right? So above this, we will consider that this market is a long contender now, and then we can look for considering long possibilities. It doesn't really matter which count it follows. Either case, we wait for 83.60. One interesting situation that can happen is that if the market really does go and follow this outlook, by the way, what I'm doing here is showing off the simple Elliott wave correction, which we call an ABC. Let me just show that in this box on the right hand side. An ABC correction looks like this. First leg will be down, then there will be a leg up, and then the C leg will take out the low of wave A. So this low will be taken out. It Since this low has already been taken out, that's why we are considering both scenarios. You can think of it like that. But anyways, as I was saying, one interesting situation can happen if this market really does go lower and take out the low of wave C here. Let me place an alert here first. Then we get to build up our positions to the upside. Specifically speaking, if you are going for 5 lots, then we can buy one here, and then as the market proceeds to the upside, add more, right? So that is one important thing to keep in mind. Again, this becomes a wait and watch market. Upside level 83.60 plus for long consideration, and downside we have, I mean, that point we would be selling, right? And downside we have already discussed the setups. But do keep in mind it's a market to wait and watch and look out for. Keep it on your track list. I'm thinking it will give us good trades, and if you know how to do scalps and you are good at counting the waves, then you can possibly look for some short-term opportunities to the downside as well. Otherwise, just leave it for the bigger direction play. Nothing much to add on CL here. If you guys have any doubts or questions on this chart, you can just push them in the comment section. Of the live chat, I mean. Otherwise, we'll move over to our next chart of gold. Second. So here we are on our next chart. Let's just very quickly have a glance at what was being discussed in the last webinar on the chart of gold, so that we can have a context of what was being said. We had the discussions around somewhere here, I guess. Yeah. So that's about it. This was our discussion on gold. Our idea was that the market will either go up and then down or straight up. As you can see, we had the red colored count suggesting straight up movement and the yellow count suggesting minor upward movement and down. And the conclusion from the last analysis was that we are going to indeed see a movement in the upward direction on this counter, which means that a long plays were expected on this counter, and which is what actually happened. We were able to capture some trades. Let's just quickly check here. We discussed this thing on 12th, book profit on longs. After 12th, let's see what was being done in the group. Oh yeah, on 12th we have added longs, expected progression, book profit on longs. Let's see what was this trade very quickly. Longs at 2416, closed at 2420. So this was a short term trade. And then again, we entered longs on 16th. Then some scalp trades in the middle. Scalp profits were booked. Position still held, I think. Yes, the position long is still held. And then we were telling our stop loss above our entry to 2447, which was later hit, and we booked profits by exiting the market with a trailing stop loss hit. So these were all series of trades which were posted live in our Slack group. Again, you can see the details in the bottom. If you are interested in becoming a part, you can request details because it is completely exclusive and available on request only. Using the link in the description, you can get the inquiries. Right. So coming back to our discussion on gold, as I just mentioned, everything just played out. We just saw the live trades, and now it's time to see the live charts. And we have some corrective movement happening right now instead of straight off takeoff. Let me just squeeze it. There we go. So from this point, 2429 something, let's say 2430 is our point of reference, and the time is around 12th April, sometime around 12th April. From here on, what we do seem to be having is a flat kind of corrective structure, and on the right hand side, here is the basic pattern of a flat structure. First leg down, A, correction to the upside, B, and next leg down is called C. Now the characteristic trait of this correction is that first of all it will take out the high. Actually the high was taken here, so it has taken out the high twice. Taking out the high, some breakout long trades will be triggered, and those longs will then be trapped. So these guys, when they are squeezed, basically when they exit their positions, that's when bulk of the buying will happen, which is expected to lead the incoming rally to the upside. So we are currently in the C leg. Let me just type it here. A down. This is expected to be the B up. And as I just mentioned, these breakout longs, when their stop losses are hit or when they close the positions, majority of them, that's when the market will start to reverse. That's the major theory behind this structure or corrective structure of flat. Right. So in this particular case, the C lag seems to be continuing, and generally in the wave C, we will seem to have 5 waves. So basically, if we magnify this part, we will have a pattern like this. Let me draw it with yellow color. So first leg down, second leg up, third down, fourth up, and so on and so forth. That's the basic pattern we expect in a C leg down. In this particular case, we have 1 here, 2 here, and possibly the third is in play, 4 and 5. So I personally think that some more downside can be seen on this counter before any possible takeoff. But at the same time, we are not really concerned. My long-term analysis or high time frame analysis, I should say, suggests that once the market establishes above 2493, then we can consider this market as a good long contender or a new long or upside trend to have been established, right? So basically, we do wait for the market to go above 2493. Let me just point that out. And once we do have that, that's when we will call that this market is possibly heading up. So those who are looking to establish new longs positionally, that's the level 2493, and those who are looking to enter partial positions, small by little by little. Basically, you need to have the proper knowledge of what you're doing. Then you gotta do it by waiting for this fifth leg down, waiting for confirmation, and once you have, add one lot here, more as they go up. Basically, you need to check the whole thing in detail, right? That's about it for our take on gold and rock. Rockford is saying another winning week. Yes, we actually had 100% winning week this week in our actual trades and all the setups which we posted on Slack, literally all across these channels. We don't just cover these four instruments or five, six instruments which we discuss in these webinars. In the actual Slack, we cover a lot more. We do cover US stocks, Indian stocks, bonds, etc., etc. Right. So thank you for pointing that out, Rock. Now, continuing on with our discussions, we'll now move over to the chart of S&P. If you guys have any question regarding what we just discussed, you can put it in the live chat, right? Otherwise, we'll move forward with the next chart. 2 weeks in a row. Yes. Yeah, I was just pointing this week because it's recent news. We actually had winning weeks back to back. Okay, so I do not see any new questions here regarding our discussion. So let's move over to our next chart of S&P's 500. A little bit detailed discussion for the indices S&P as well as Nifty. Be with me till the end because the analysis is not straightforward and some cautionary signs are seemingly appearing on these charts. And just before we continue with this chart, very small request: if you are liking the discussions here, do not forget to hit the like button and more importantly, share the content with your friends, colleagues, and people who find it useful. So here is our discussion of S&P 500. Last time we discussed this was around 5, 6 to 4-ish levels, right? My bias was very clear. The main bias was that this market can propagate sideways here within this box range. And once that propagation was over, we expected upside movement. Second, less likely or lower probability bias was that this market can propagate sideways, go down to the 38.2 level, and then head up. Now, what has happened is kind of different than what we generally discuss. And that is the reason why we would like to discuss this chart in detail, right? Late question from someone here on gold. Gaurav Soni has asked a question on gold. Let me just very quickly check the chart and see. Well, Gaurav, to answer your question, actually, gold can propagate and stop anywhere within this range. What is this range? Anywhere within this range, it can stop, right? I personally think that around 2377 75 ish level, I would like to have a look at it. I have not checked out any levels. Basically, if we want to check the levels, we need to wait for this fourth wave to complete, and as such, as you can see, the fourth wave has not even started. So that's why I did not project any levels. Once we have this fourth wave in play, then we will probably able to better estimate the ending point for the fifth wave, which can then suggest the end point of this whole sea leg, which can then complete this correction. So that's a possibility we have to check in the future. I cannot comment on it right now. Do follow me on Twitter if you can. I do sometimes post what you call updates for these charts. I'm not very frequent with it. It takes a lot of time just to post on Slack. So it is possible if I do update it, I will update it there. Otherwise, not. Right. Let's get back to our discussion on S&P's 500. Yes. So as I was saying in our last webinar, our view was kind of very bullish, and what played out is not really in conjunction with that expectation. So here I'm going to have a kind of detailed discussion here. So bear with me for a bit, right? First of all, let's have a look at what we have here from a shorter time frame perspective. This is the, although this is the daily chart, we can go to any time frame. Actually, it doesn't really matter at this point. Let me just give you a quick glance on what I'm thinking here. So we are taking this as our point of reference, and the market price here is around 49.30. So from this point of reference, the important thing to note here is that we have two possible expectations of how this market will proceed. First is that the bullish scenario is suggesting one more leg up remaining in the upper direction, right? That is, let's just call it H2, suggesting sideways movement or correction, minor correction or whatever, and then up, right? And there is the second possibility, which is basically suggesting that this whole thing is complete. Let me just point it out with a different color. Possibly 3 here, 4 here, and then 5 here. Of course, it does not look very pleasing to the eyes, but it's a count which kind of holds off on all technicalities. 3 is not the shortest, other guidelines are seemingly holding, so we will have to consider it. And in alignment with that count, if we remove everything, you can check that this market has also given a kind of a strong fall here. So basis of all that, I had some long trades. I have booked losses on those longs, and I'm currently out of this market waiting for some clarity. Why? As I just mentioned, possible sideways, then up, also possible straight down. Since both possibilities are possible and the longs do not have a confirmation yet, they will be giving confirmation. I mean, basically at the break of the last high or somewhere around or above 5660, let's say. So we do not want to hurry in this market. And now we'll discuss a little bit detailed analysis, right? So now looking at this chart, we do seem to be having a confluence of support levels around this price level of what is this 5500 level, which is also a psychological number. Although I did not check the number, I was just drawing the levels. So around 5500, we have a confluence of support. If the market takes support around here, then it is possible that the bullish count. Let me draw this very quick. That the bullish count of this market still continuing. Actually, one thing I did not check. One second, one second. That is an important and vital thing. And if it is not fitting in, then this whole thing may not even work out. It is fitting in. Right. All right. So, anyways, what I was saying was that if this level of 5500 does hold, that is the market starts to take support above it or at it, then we can expect that this market is possibly going for the fourth here and then possibly fifth here. However, the market does not sustain above 5500, then it opens up to the sideways, not sideways actually, more bearish perspective, right? In that case, we'll discuss the more bearish perspective now. Remove this, and well, in the more bearish scenario, we have next support incoming around 53.96. Now it is important level. I'll just mark it here. Why? Because we also have a trend line confluence, as you can see with this yellow oval. So 53.96 six-ish level, not the exact level, six-ish, I should say. So around that level, we can expect next possible support incoming. So in either case, this market can travel lower, and the next support is actually almost 100 points away from the most immediate support, which is itself above 30 or 40 points something from the level. So that's why I decided to get out of this market. And now comes the trade setups. Quite simple. Either we wait for the market to show some signs of it taking support at 5500 or 53.96, or we wait for a clear breakout trades. In either case, it's a wait and watch market. There is no trade activity unless you are looking for scalp short trades. Yes, scalp short trades are available from the current or level of 5537 to 5500. I'm pretty sure we can catch a few points here, and I personally might enter some as well, possibly after this webinar. But then again, that does require a different level of skill set and understanding of this market. So yeah, as I said, from long term perspective, I wanted to give you an indication of what's happening here, which I have. If you guys have any doubts or questions, you can just type them in the live chat right now while I look to show you something else here. So this is the high time frame count on daily from this point of reference. around 3500. Right, we seem to be having a series of nested impulses, and currently we are hoping that we are going to see either dot to 1 second. Yes, dot to level here. And if that's not the case, then it can lead to extreme bearishness, as you can see already. That is, if the market does not hold for this dot to scenario, then it would mean that possibly this whole thing, which started over here at the price level of 3800, has completed an impulse. And if an impulse is complete, then the correction of this big of an impulse, 3800 to 5600 ish level, will also be in the proportion to the length. I do not believe that count is valid as of yet, but if it is, we will come to know quite soon enough. The first sign of that will be market going below our second support, 5400-ish level, and then sustaining below it. Right, so we'll check it next time. Let's see how it goes. Instead of creating multiple scenario analysis here, we'll leave it as it is for now. So that's about it for our discussion on S&P. Wait for a few seconds here. If you guys have any doubts or questions, you can just type them in the live chat before we move over to our next chart of Nifty 50, which will be followed by BTC. Again, a cautionary sign on Nifty as well, just in alignment with the global indexes, as well as the upcoming budget here is also there. So here is our last webinar's discussion. Let's check what was being said on the chart of Nifty 50. Somewhere around here, we were discussing this chart. And the basic idea was that we were looking for long setups. The price at the time of discussion was market is closed, obviously on Nifty 24588. So was the price. And the basic theme was that we are looking at an impulse which is heading in the upward direction. And the upcoming count did go in the upward direction, but it was not very straightforward as these simple lines. Things often are not straightforward, right? Though we were able to capture a substantial part of the move. Let's just look at the actual count currently in play. So here's the live chart on Nifty. This is the discussion, let's say 12th July, somewhere here. So somewhere here, the market was on 12th July when we discussed. And as I said, the market did go up, but it was not very straightforward as we were expecting last time. What was the discussion? From there has played out. And now let's see the cautionary sign on Nifty, as I did mention. All global indices are, not all, I mean, at least the two we are tracking are giving cautionary signs. Same setup for Nifty. If we go and look at the point of reference, which is coming around here, 4th June, price level around 21,290-ish level. One second. So from here on, we have a possible impulse in play. And as you can see, if this impulse is complete, that's the cautionary sign I'm talking about, then this market can give further downward movement going to 24,340 and then 24,020-ish levels, right? All these things and all these levels are now clearly open, and this market is now not a long only market as we were previously thinking. For us to take it into consideration again for longs, we need to see some sort of clear breakout to the upside or some other sign, which I will not be discussing here. But basically, we do expect that this market is giving a possible correction in ABC formation. Maybe it could also form some complex formation, but more or less, I'll just point out the levels at once. Since this is not a long only market, it now becomes more of a detailed analysis required, short term analysis required kind of market. Yes. So here are the short term levels 24,350. And the next immediate level is incoming at 24,020. Further downward movements are possible to levels of 23,500 or lower, but we'll leave it for now. A simple zigzag can take it only so far. That would suggest 24,500 or lower level will suggest extreme bearishness and possibly something else happening in this market. Excuse me. So nothing much to add here on Nifty. No longs for now until we see a breakout or some clear confirmation like completion of this correction. And yes, there is a kind of short setup we will look out for if we see some resistance being taken on this red trend line. Basically, the market, if it follows this simple bluish line, takes resistance here, then we will consider some shorting opportunities on this counter. That is one thing to keep in mind for sure. Right. Other than that, I do not have anything to add on this chart at all. We will now move over to the last chart of BTC. If you guys have any doubts or questions, you can just type them in the live chat. So here is our chart from last discussion. Let's see what was being said on the chart of BTC in our last webinar. Around somewhere here we were discussing it, I guess. Yes, here it is. So this was our main theme. We were waiting for the market to give a move below 55490, and move below that would suggest that this market is possibly following a diagonal pattern, which would lead the market to go lower than 53,500-ish level, roughly speaking. This was the pattern, as you can see on the right hand side. Now what happened over the few days is the market did not break below 55490. The short setup was never triggered, and instead the market has completely reversed and gone to the upside. So basically we need to look at the charts and make new counts, which we already have, of course. And let me just discuss that little bit of it, which we discuss in these live webinars. Obviously, do keep in mind these charts are updated regularly in our private Slack group. And what we discuss here is just a figment of our analysis and setups, which we actually trade and post in the Slack. Those who did not know, the details are available on request by using the link, which is scrolling in the bottom of the screen or bottom of this video. So here is our chart of BDC, and why on earth are my counts not loading up? So seemingly it's taking some time. I'll just refresh it. In the meantime, if you have liked the content so far, I'll request that you guys hit the like button, and much more importantly, kindly do not forget to share this content with your friends and colleagues on your Slacks, Discords, WhatsApp, Telegrams, or whatever social media platforms you are using, Twitter, Facebook, etc., etc. That helps us a lot in keeping these contents available to you publicly. And here is a long setup already triggered on BTC. This was already posted, and we were expecting correction for 4 and then leg up. So basically, this one leg up, which will take out the high of 66,114 in the short term, was a short term long setup, which is already in play, as you can see. The count in play I'll discuss from here at the end of dot B is that we have a simple impulse in the other direction from this point of reference around a price of 53570, and this simple impulse has taken this market up in a 5-wave progression, which we have marked here on the screen on the right hand side in the hand drawn formation. Now the possibility of this wave for getting completed is also there, and its continuing is also there, but doesn't really matter. In either case, we expect that the market will take out the last high of 66150, which will be this leg, which is what we call the fifth leg, because we have third leg circled 3 high, which will always be taken out by the fifth wave circled high, right? So as I said, even if the 4 is complete or continuing, in either case, we do not care. Is a short-term position wise, we do expect this market will take out this high. That also means it opens up for some scalp possibilities, but generally speaking, the brokerages are quite high on this counter, and I do not like to do much of a scalp on this. So short-term wise, we expect some upward movement. Then it can take some resistance on this incoming trend line, this bluish trend line. We'll wait and watch there. But that's about it. I only had a short term play here. I'm not planning out the whole thing. We will wait and watch once the setup is complete to see what new things this market holds for us in the bag. So, with that being said, we have discussed now all the various markets which we generally discuss in these webinars. And thank you for those of you who stick till the end. Do not forget to share this content and, of course, hit the like if you haven't already. And with that being said, take care, guys, and I'll see you in the next webinar. And yeah, of course, if you have already completed our video courses, do not forget that we will be running the new batch for training program LT for serious students. So if you are interested, you can always find the details by request via this form 50is.com/training program LT. And that's about it, guys. I'll see you guys in the next one. Take care.